All right, today we're digging into a financial forecast that honestly puts the whole AI revolution into a stunning new perspective. An investment bank has put a price tag on the future of AI, and the numbers, well, they're just mind-boggling.
So let's just get right to it. The headline number. By 2030, global spending on AI infrastructure is projected to hit an absolutely astronomical $1.3 trillion. That's trillion with a T. And get this, we're not talking about software or apps here. This is the price of the raw physical power needed to make AI work. You know, when you hear a number that big, it almost doesn't feel real. So it brings up the pretty obvious question, how on earth is the world going to spend that much money on AI infrastructure in just the next few years? Well, here's the thing. This isn't some pie-in-the-sky prediction for the distant future. The ramp-up is happening right now. And it's happening a whole lot faster than even the experts first thought. The momentum is building at a really incredible pace. Just take a look at this. UBS didn't just tweak their old forecast, they pretty much ripped it up. For 2025 alone, they've tacked on nearly $50 billion to their estimate. What that tells you is that the reality on the ground is moving at warp speed, even faster than their already optimistic predictions. So what's fueling this explosive growth? It really all boils down to one core driver, a relentless, accelerating demand for raw computing power. Modern AI is just, well, it's incredibly power-hungry. And you don't have to take my word for it. Here it is, straight from the bank's report. The need for computational power to train and run these complex AI models is just growing way faster than anyone thought possible. To put it simply, demand is just completely overwhelming the current supply. And we are seeing this trend play out in some absolutely monster deals. I mean, think about it. OpenAI signing a $38 billion agreement with Amazon just to lock down computing capacity. These aren't small purchases. This is a full-on arms race for the fundamental infrastructure you need to even compete. And hey, it's not just the startups driving this. The world's biggest tech companies are right at the absolute center of this spending spree. They're acting as both the primary suppliers and, more, as massive consumers themselves. The internal demand at these companies is just exploding. At Google, the use of their own AI models jumped 130-fold in just 18 months. That's just wild. And at the same time, Meta's need for computing power has completely blown past its own forecasts. They literally can't build data centers fast enough to keep up. Okay, so $1 trillion is being poured into infrastructure. What does this actually mean for the wider economy, for the stock market, and for anyone just trying to understand this massive shift? To really get a handle on the market impact, we've got to talk about a key metric called CapEx intensity. It sounds a little technical, but it's pretty simple. It just measures how much of a company's revenue is being plowed right back into long-term assets, like the data centers and servers that power all this AI stuff. Now, get this. Over the last 5 years, big tech has already been spending over 20% of its revenue on this stuff. But now, with AI in the driver's seat, UBS forecasts that's going to climb to an incredible 27% by 2030. They are literally betting their future on building this infrastructure. So, with this absolute tsunami of investment flooding in, the conclusion from UBS is crystal clear and pretty direct. The companies that are making this AI build-out happen, the ones selling the chips, the servers, and the cloud capacity, they are positioned to be major drivers of the stock market for the foreseeable future. The bank's takeaway for investors is really straightforward. For anyone who's not yet invested in the AI theme, they suggest adding some exposure. But, and this is a really important but, they recommend a broad, diversified approach, not trying to pick one or two specific winners in this really complex ecosystem. And all that leaves us with a final, really provocative thought. This immense trillion-dollar investment is really just the foundation. It's like building the roads and the plumbing for whatever comes next. The real question is, once this foundation is all built, which industries are going to be completely transformed on top of it?